Hey everyone, today we're going to explore 7 common mistakes that traders often make. These are the mistakes that can really hurt your chances of success. But the good news is you can easily avoid them with the right knowledge. Let's get started. Number one mistake is traders make is not having a trading plan. Imagine jumping into a car without knowing where you're going or how to get there. It's the same with trading. Many traders just jump in without a plan or clear goal. Suppose if you don't have a plan, how do you know when to enter or exit a trade? This is how people end up making impulsive decisions and losing money. Always have a plan before you start trading. A good trading plan should be simple and clear. First, think about your entry points. This is when you'll buy. You need to know exactly what conditions or signals to look for before making a trade. It could be a specific price drop or a certain chart pattern. Next, consider your exit points. Know when you're going to sell, whether you're taking profits or avoiding a loss. It's important to decide this before you even start trading. Finally, focus on risk management. Decide how much money you're comfortable risking on each trade. The second mistake is lack of practice. Many traders rely only on indicators or use paper trading as practice without real money at stake. This can lead to unrealistic expectations. Why? Because paper trading lacks the emotional aspect of trading. In real trading, emotions like fear and greed play a huge role. You won't feel those emotions if you're not actually risking anything, so you're not really preparing yourself for real life trading. Start small in the real market. Use small amounts of money so you can learn what it feels like to win and lose with real cash. Real trading practice will teach you how to handle emotions and help you improve faster. If you're looking for a discount on your account, head over to Coupon Terra. This site provides verified and up-to-date promo codes. Simply go to the Coupon Terra website, type the name of any company into the search bar, and press enter to view a list of available coupon codes and deals. Once you find a code that works for you, click on it and copy it to your keyboard. You may be redirected automatically to the company's site. When you're ready to check out, look for the promo code box on the payment page and paste in the coupon code. The discount will be applied to your total cost immediately. Complete the payment at the discounted price and enjoy your savings. The third mistake is bad timing. Timing is very tricky, especially for beginners who often buy or sell at the wrong time. This usually happens because they're acting on emotions instead of following a plan. For example, imagine a stock price is rising quickly and you buy it because you're excited and don't want to miss out. Then the price suddenly drops and you end up losing money because you bought at the wrong time. To improve your timing, keep a trading journal where you note down why you made each trade. This helps you see patterns in your decisions. Also, use charts to predict changes so you know when the right time to buy or sell might be. Lastly, always take your trading plan to avoid making fast emotional decisions. The fourth mistake is we have FOMO, or the fear of missing out. Have you ever watched a market that's rapidly rising and felt that urge to jump in because you're afraid you'll miss the opportunity? That's FOMO. It makes you act quickly and often leads to bad decisions. Many traders end up buying too high or selling too low because they're reacting to FOMO instead of following their plan. The key here is patience. If the price isn't where you want it, wait, stick to your plan. Remember, the market is always moving and there will always be another opportunity. Don't let fear make your decisions for you. The fifth mistake is trusting software too much. Tools like charts, indicators, and automated programs can be very helpful, but remember they are just tools, not magic solutions. Imagine you have a tool that tells you to buy a stock because of some signals, but you don't understand why. You buy, but the price drops because there's bad news about the company, and the tool didn't know that. Always understand why a tool is giving you a certain signal. Use them as helpers, but make sure you do your own thinking before making decisions. The sixth mistake is not cutting your losses. Some traders hold onto a losing trade thinking it will eventually go back up, but sometimes it just keeps falling. For example, you buy a stock at $100 and it starts going down. You think it will go back up, I just wait, but soon it's at $80, then $70. If you had decided earlier to sell when it dropped to $95, you would have avoided a bigger loss. Decide how much you can afford to lose before you even make a trade. Set a stop loss order. For example, if you don't want to lose more than $5, set the stop loss at $95. This way you know when to sell and you won't be stuck with bigger losses. Amazing, right? The seventh mistake is using high leverage. Leverage is when you borrow money from your broker to trade more than you actually have. This can mean bigger profits but also much bigger losses. Imagine you have $100 but you use 10 times leverage to trade $1,000. If the stock goes up by 10%, you make $100 profit, which sounds great. But if it goes down by 10%, you lose $100, which is all the money you have. Just 2 bad trades could wipe out your entire account. But use leverage carefully. Only use it when you're sure about the trade, and always set a stop loss. It's better to trade small at first so you don't risk losing everything too quickly. Let's quickly recap the 7 common trading mistakes to avoid. The number 1 was no trading plan. Always have a plan before you start trading. Number 2 was lack of practice exercise with small real trades to learn how it feels. Number 3 was bad timing. Don't rush, plan your moves. Number 4 was FOMO, be patient. Don't jump in just because others are. Number 5 was trusting software. Too much use software to help, but do your own analysis too. Number 6 was not cutting losses. Set stop loss orders and know when to quit. Number 7 was using high leverage. Start small and use leverage only if you are confident. In short, trading can be challenging, but if you avoid these mistakes, you will give yourself a much better chance of success. Remember, it's all about discipline and sticking to your plan. If you found this video helpful, hit the like button and subscribe for more trading tips. Good luck and trade smart. See you in the next video.